After 5 straight months of seeing sale price increases throughout the Fraser Valley, this past month we saw the first recording of sale prices and sales volume decline. In this video, I'm going to go over a market update for the Fraser Valley and Langley area, and I'm also going to talk about the Canadian market in general and what's going on with Canadian debt, immigration, and also overall housing markets in other areas of Canada. But before I dive in and go over all this information, I would appreciate if you guys are enjoying my content to hit the like and subscribe button. Reminder, you can book a 30-minute call with me by clicking in the description below. As mentioned, we have seen a decline in the number of sales and sale price points for the first time since the beginning of the year. Now, this is normal because we are in the month of August and we are looking at the July stats still, and usually the summer months are generally quite slow. Buyers are away on holidays, so there's just not as many people looking, and most sellers want to wait until the fall market. So we do have to take the fact that summer is historically a slower month into consideration when we are looking at the data from the beginning of the year. Now, what's going to be really interesting is to see what happens in September and October to really grasp an understanding of what the market's going to look like for the remainder of 2023. Overall, we are still sitting in a seller's market across the Fraser Valley for all asset classes. We are at 22% for sales to active ratio, and anything above 20% indicates a seller's market. When we look at the Fraser Valley real estate market and compare it to this time last year, detached sale prices are down 3.1% year over year, townhome sale prices are down 2.7% year over year, and condo prices are actually up 0.8% from this time last year. Prices still are quite high considering the fact that interest rates have risen 10 times since the peak of the market, and that again just shows us how much buyer demand we have in the local market. Since January, the number of sales have been on an increase, with the exception between March and April months, and all the way up to June, and we saw quite a decline in the month of July. And when I go to look at the median sale prices, we can also see that as of January up until June 2023, we were on a consistent incline in terms of the sale prices we were seeing across the valley. However, last month, 2023, saw its first decline in sale prices. Not only are the summer months historically slow in general, but this year in particular, we have seen 2 interest rate hikes, one in June and another in July, and we are expected to have another rate hike in September. And there are a lot of economists and bankers that are suggesting that we will see another 0.25% increase. Rates are right now at the highest they've been in over 20 years, and the overnight lending rate is sitting at 5%. Most variable rate holders can expect anywhere between a 6.5 to 7 interest rate right now, and most fixed rates are sitting around 5.5 to 6%. Again, depending on what kind of term you have. When we turn our attention to the number of active listings that we're seeing across the Fraser Valley for all asset classes, we can see that the inventory levels are climbing. So I've got active listings in here for all of the Fraser Valley. And again, I can go and isolate them, but they all have the same flow where since December, we've been on a constant incline. So more and more inventory is being added to the market, which of course is good for buyers, not necessarily great for sellers because buyers have more choice. Overall, we are sitting at just under 5,400 listings across the Fraser Valley, and as I always say, anywhere around the 6,000 unit mark is where we need to be to have a balanced market. To put the Fraser Valley's active listings into perspective, I'm going to compare that with active listings in BC. So we can see here they've also been on an upward trend since the beginning of the year and have only currently been seeing a dip in the market. Alberta is the only one that is on a decline for active listings, and again, Alberta's been pretty hot over the last couple of years because the market was so hot people were wanting to buy. And of course, Alberta offers homes at a very large discount when you're comparing those to Vancouver and Toronto. And then when we flip over to Ontario, it's very, very similar in the patterns that BC is seeing. So 2022, we were at the bottom because the market was the hottest. And then since then, we've kind of been slowly building up inventory over the past year and have only recently seen a dip that has been corrected. And we are starting to again gather more inventory, which of course is a good thing. We've always had a housing shortage problem, especially in BC and Ontario. So to see active listings increase is a good thing. Canada is seeing record high immigration levels. That mixed in with the fact that we are seeing a housing shortage due to a lot of developers slowing construction because they have fear that the high interest rates are going to hurt their sale prices. And now there's being a lot of pushback on Trudeau and the Canadian government suggesting that they should slow immigration down, as we are already seeing housing shortages in most of the major cities within Canada. Canadian household debt is also seeing an increase, and credit card debt is now sitting at 13% higher than it was this time last year. Since 2020, 2021, they've been going up on a consistent incline, and looking at lines of credit and mortgages, they have remained relatively low for the past few years and only have recently started to see an upward tick. If there's one thing about Canadians, it's that they do not want to miss a mortgage payment. So when we look at the mortgage delinquency rates, they are at an all-time low, sitting at just 0.15%. However, economists are warning that we should start to see these delinquency levels rise and more people default on their mortgage simply because when they go to renew their term, they won't be able to keep up with the increase in rates that we've seen over the past year or since those people originally purchased their mortgage. So a lot of variable rates, like I mentioned, are sitting around the 7% mark, and you can expect fixed rates to be sitting anywhere between 5 and 6.5 to upwards of 7%, again, depending on the type of term that you take out. As mentioned, we are sitting in an overall seller's market across the Fraser Valley. The next Bank of Canada rate announcement is September 6th, with thoughts that they could potentially go up another 0.25%. This again has mixed reviews. Some people say it is, some people say it's going to hold. We really don't know, but one thing's for certain, that come September and October, we will have a better indication on what we can expect for the remainder of 2023, as the months of July and August are generally quite sleepy and they don't necessarily reflect the true economy that we are in right now for the housing market in the Fraser Valley. I hope you guys found this information helpful. As always, I would appreciate if you are finding it helpful to hit that like and subscribe button. And also a reminder, you can book a call with me by clicking in the description link below. We could book a 30-minute consultation to talk about all things real estate. I hope you guys have a great day, and I will talk to you soon.